For the first time ever, the price of Bitcoin has crossed $93,000. I mean, it was really difficult to imagine something like that to happen because if you take a look at the price of Bitcoin like 2 years ago, it was around $16,000, which means that the price of Bitcoin has increased by around 500%. So if you take Bitcoin and you kind of compare it to other investments out there in the market, Bitcoin turned out to be one of the best investments out there. How many investments can you actually point out that grew by around 500%? So if the price of Bitcoin crossed $93,000, that led a lot of people to ask a very obvious question. Why wouldn't it cross $100,000? Well, if it can cross $100,000, probably maybe it can even grow to as much as $200,000, $300,000, or maybe as wild as $1 million per coin. I mean, if something like that is going to happen, a lot of people are going to get rich, like really rich. And that puts the total market cap of Bitcoin alone at around $1.8 million and makes it more valuable than most of the companies out there. Of course, if you take a look at the largest tech companies such as Apple, Nvidia, or Microsoft, they're worth like $3 trillion or more. But Bitcoin is quickly catching up, given the fact that Bitcoin is, just emerged like 15 or probably like 18 years ago or something like that. But if you kind of pay attention and take a look at the total market cap of crypto overall, it's already over $3 trillion. Of course, more than 50% of that represents the Bitcoin alone, but it tells you a lot about how fast and quickly the crypto industry is actually growing. So here in this video, let's try to answer a very simple question. What are the reasons that led the price of Bitcoin to cross $93,000, and will it actually keep growing or not? Because if you kind of understand the reasons that led it to grow this much just recently, because if you just go back probably a year ago, it was around like $35,000 or maybe even less than that. And now it is growing to almost $100,000. That's almost a 200% increase in just the last 12 months or so. And that will give us a better understanding of where the price of Bitcoin could be in the foreseeable future. As of the time that I'm recording this video, the price is around $91,000. Maybe by the time this video is up, it could go much higher than that. Now, in order to answer that question, we have first to understand how to value crypto in the first place. And this is probably the most tricky question out there because most people don't have a clue about how to value crypto. It's not because most people don't know how crypto works, but you have to understand that a crypto is a recent asset that was created just recently. I mean, if I'm not mistaken, crypto or Bitcoin in particular is the first crypto out there, and it was created right after the 2008 financial crisis. And it's not like a stock, or it's not like a currency, a traditional currency that you can say so. But because it's a completely new thing out there, we have to develop new means in order to measure it. You can't measure Bitcoin the way you measure a stock. You can't measure Bitcoin the way you measure any other currency out there. For example, if you're trying to understand whether this is a good investment or not when it comes to the stock market, we have a real company, a real business with real products, with real people, with real offices. And the more demand there is for that product, the better that company is actually managed, the better financial statements they show, the more profitable the company gets over time. We can give it a value, and then we can compare that value to the price that the stock of that company is being traded and make a rational investing decision whether this stock is fairly valued, whether this stock is undervalued, or maybe this stock is just overvalued and it makes no sense to actually buy that stock in the first place. And these methods, when it comes to the stock market and the businesses, we have developed them over the last few centuries. Maybe, yes, of course, most of them actually got extremely good just in the last century or so. But you have to understand that the first stock market was built over 500 years ago or something like that. I can't really exactly remember the exact year, but it's around 500 years or so. So you can't do the exact same with Bitcoin. We don't know the profitability of Bitcoin. There is not even a profitability because this is not a company. This is not like a business. Bitcoin presents itself as a form of currency. And the reason it's valued this much is because there is an X amount of demand for it. And we can't even take it and measure it like we measure a traditional currency. Like, think about that for a second. If you compare Bitcoin to the dollar, at least the dollar, we have a set of measurements in order to understand why, for example, the dollar is worth X amount of money. For instance, there is always demand for the dollar, at least in the United States, because people in the US have to pay their taxes in the dollars. There's also always demand for the dollar because the US government needs the dollar and it pays people in dollars. So because of this demand, there is always demand for the dollar. So we have the Fed on the other side that controls the supply of the dollar. So we control the demand and we control the supply, and that's how we know how to keep the dollar strong or keep it weak, whatever is best suits the economy at that particular time. And if you take any other currency out there, for example, the Chinese yuan, if the demand for the Chinese products is going to rise, the demand for the Chinese yuan is going to rise, which will make the Chinese yuan stronger, and vice versa. If people no longer want to buy Chinese products, the demand for the Chinese yuan is going to drop, which means that the Chinese yuan is going to get weaker. But you can't really judge the Bitcoin or any other crypto out there with the exact same methodology or the exact same mindset. People want to buy there is of course demand for it because people want to have a decentralized financial system where they can move money without the interference of the government. You can have, for example, a cold wallet, keep all your millions of dollars in that cold wallet and just travel all across the globe, and nobody will know that you have moved so much money in the first place. There is certainly demand for it, and there is of course a limited supply of Bitcoin. At least that's how it seems on paper, or that's how it has been working all this time. So the constant demand that is rising for Bitcoin is actually driving the price higher. But there isn't like literally a central authority that would force people to have demand for Bitcoin in the first place. Like, anybody can get out there and create its own cryptocurrency, and if people would want that, they can literally just move from Bitcoin to that other currency out there, and Bitcoin will die tomorrow. But because of the network effect, which means that the more people use Bitcoin, the more demand is going to be for it, and because more people gonna use it now, the demand for it is going to rise, and that will make it, for example, much more popular than any other cryptocurrency out there. But when it comes to the dollar, for example, you have no other choice in the US but to pay your taxes in the dollar. And you have no other choice but to use the dollar in the US because there is a central authority that will force for the demand to be there for it. And that's why you can't really use traditional means in order to value Bitcoin or any other cryptocurrency out there, which is why it's more like a risky investment. But the main question that people want to answer is that why exactly at the beginning of this year or around April of this year, the price of Bitcoin suddenly started rising from less than like $40,000 to around, I would say it's like around $75,000 or $76,000. Now, there are a few reasons for that. I've talked about that back in the beginning of this year. First of all, we have institutional investors are jumping in and buying a lot of Bitcoin. Now, prior to that, a lot of, Wall Street and institutional investors didn't really get involved into crypto. Why? Because again, we don't have like specific measurements in order to justify our decisions. Why would the price of Bitcoin or any other cryptocurrency is going to rise? We don't have specific reasons. Maybe we can actually do that with a company like Binance that is dealing with crypto. So for example, the profitability of Binance is going to increase. We can invest in that. We can measure it. We can make a rational investing decision. And that's why Wall Street and institutional investors, if you don't really count Elon Musk, were avoiding Bitcoin and crypto overall. And now suddenly, the beginning of this year, all of them jumped in. So institutional investors created a lot of demand that led to the rise of the price of Bitcoin. Now, another reason is, of course, ETFs. ETFs are now playing a more important role when it comes to crypto overall. An ETF is basically a financial institutions that would take investors' money, and instead of just buying one crypto, they will buy a lot of crypto. So by buying a stock in this institutional financial company, you're buying a small portion in multiple cryptocurrencies out there. So they can simply just buy or invest in top 100 cryptocurrencies or top 50 cryptocurrencies. So because the risk is diversified, is one of those cryptos is going to go down or going to go bankrupt, nobody really cares because most of them overall is going to go much better. The exact same thing could be said, for example, about the S&P 500. So if you invest in Vanguard S&P 500, they invest in the top 500 US companies. If some of those companies are going to do poorly, for example, nobody really cares because most of those companies are going to grow since the US economy overall keeps growing. Because of those ETFs, the demand for crypto again started rising, which drove the price to actually rise. And most of those ETFs were actually created back at the beginning of this year. Now, again, the next most important thing that led to the rise of the price of Bitcoin is, of course, Bitcoin halving. Now, you have to understand that in order for you to mine Bitcoin, you have to solve complicated math problems, and you have to solve so many of them until you get the right one in order to create the new block. And because more people are actually using Bitcoin, it gets much more difficult for it to actually mine Bitcoin and solve those problems, and the lesser the reward is going to get. I understand why the price of Bitcoin, for example, at this time started rising dramatically, but why there is a sudden increase just recently. Like look at this. In the last month or so, the price of Bitcoin rose for around, I would say, like $60,000 to like $93,000. If we understand the reasons here, for example, we can say for a fact, or not a fact, we might understand the reasons why it can go, for example, to 100 or maybe 200. I'm just guessing at this point. But the reason behind that is very simple. One of the main reasons that drove the price of Bitcoin to increase dramatically in the last couple of months is because the Federal Reserve dropped the interest rate by 0.5% in September of this year. It was the first drop in 2 years. Remember, the Fed set the rates at around 5.5%, and that increase that happened in 2022 led to a lot of cryptocurrencies to actually be destroyed in a couple of months. And now, because the Fed is lowering interest rates, access to the capital is becoming much more accessible. Lower interest rates makes it more possible for people to borrow money and invest in risky investments. When borrowing money is much more expensive, people don't really borrow that much, and especially if they borrow, they wouldn't borrow to invest in risky assets. But because the rates are being dropped right now, and you have to understand that the September cut rates weren't the only cut rates. We also had a cut rate that happened in November of this year. And based on what we see that is happening overall, we probably can expect another cut that will happen in the beginning of next year or so. Now, another thing that you have to understand when it comes to investments is that when something happens, for example, to the market that will have a profound impact on the market, yes, it won't have a direct impact immediately on the market. It takes time, for example, for the interest rates to have any meaningful impact on the world or the economy or the stock market overall. But you have to understand that when investors expect that the dropped rates are going to increase the price of any asset, they will start buying that asset today. And because the demand has increased today, it is going to lead the price of crypto to rise. So for example, in 2020, when the Fed lowered the rates to around 0% or so, a lot of people, it led to the increase of crypto overall. It led to the increase of all assets in the market because the dollar became weaker due to the lower interest rates. And right now, investors understand that lowering interest rates will have that kind of impact on Bitcoin or any other crypto. So I would rather buy Bitcoin today instead of waiting because I want to buy it today. And when it rises tomorrow, I want to sell it for a higher price. And when everyone starts doing that, what do you think is going to happen to the price of Bitcoin or any other asset? It is going to increase. Now, another factor that led to the increase in price of Bitcoin is, of course, the election that happened in the United States when Trump won the election. Now, Trump made it clear multiple times during his campaign rallies is that he is going to deregulate the financial markets. He's going to make the United States the center of crypto, that everybody can come to the United States and can freely do crypto business in the United States. And he's going to replace the head of SEC. And that is, of course, going to have a serious implications on the crypto market, because you have to understand that the SEC there or any other government agency is there in order to protect the consumers. Now, to protect the consumers, the government is going to impose a lot of regulations in order to make it harder to do business. It's not about making it harder to do business, but it's about making sure that nobody's going to get scammed in the crypto industry. So they put all of those rules and regulations. But those rules and regulations is going to make it much difficult for legitimate, real businesses to do crypto business out there in the United States. And that's why the demand for crypto is going to go down. Now, if you jump in and you remove all those regulations, yes, there might be a lot of scams out there, but at the same time, it's going to make it much easier to open a new cryptocurrency, register your crypto business in the United States, and a lot of investments are going to flow into the United States. And because the United States is the largest economy out there, it's literally the financial center of the world. A lot of people expect that a lot of money will be poured into the Bitcoin and crypto overall, especially when we have institutional adoptions of crypto. Now, another reason that led to the increase in price is because Elon Musk has played an important role in electing the President Trump as the President of the United States. You have to understand that Elon is a big fan of crypto overall. I remember back in the day, this meme was very popular because Elon Musk came out and he told the world that you want to buy Tesla, you can buy it with Dogecoin. I don't really exactly remember if anyone ever purchased a Tesla with a Dogecoin, but given the fact that that option was accessible at that particular point, I think it actually sent the clearest message that Elon Musk is pro-crypto, and right now he's probably the closest advisor to the United States, to the President of the United States. And what do you think is going to advise him? Of course, make it much easier for crypto to boom, make it much easier for cryptocurrencies to exist and grow in the United States, which is why a lot of people expect that in the next 4 years, crypto and Bitcoin overall is going to keep rising. Now, but most importantly, when something like that happens, it creates an environment where a lot of people start to speculate on the price of Bitcoin. I mean, if you have an opportunity to make money, for example, when it comes to crypto, especially when you have really deep pockets such as Wall Street, they're going to buy a lot of Bitcoin, wait until everybody else gets excited and they start selling. So that creates a lot of environment of speculation, especially when everybody knows that there is money to be made and everybody gonna start making, a lot of speculators are going to jump in and a lot of people will start buying Bitcoin. Now, it doesn't mean that the price of Bitcoin is going to keep rising. Maybe in the future, it could actually hit 150, 200. I don't really know what could possibly be the peak of crypto, but you have to be very careful because if it starts growing dramatically, you have to understand that speculators are there. They might have purchased a lot of those coins in that particular moment, and when it actually starts growing and it hits, for example, 95,000, 100,000, they will start massively selling. Because in order to develop any technology, it actually takes time. In order for anything to grow sustainably, it takes time. But people who speculate, especially when it comes to crypto and Bitcoin, which are not as large as like traditional currencies out there or traditional companies out there, a lot of those people in the market who have deep pockets can speculate, and a lot of traditional or the average retail investors lose money on those speculations. So you have to be very careful when it comes to crypto, even though when you see the price is actually booming. I'm not telling you that you should not buy or you should buy crypto, but you have to be extremely careful, because if you want to start investing, the best thing you can do for yourself is to learn how the markets work, is to learn how the financial system works. Because without that knowledge, you're going to get out there and you will be competing with people who not only know the market significantly better than you do, but they have deep pockets in order to manipulate the market in the first place. So be very careful. Thanks guys for watching, and I will see you in the next one.